Yes, it's huge news. And it's really one of the first times that a big TradFi firm branches into DeFi and partners with a DeFi platform. So we're really excited about that. It's a big moment for Maple, and it's also a big moment for the industry. We're seeing that traditional finance is really coming into DeFi, and they work with DeFi platforms that are operating on chain.
Welcome to another compelling episode of World Ledger with Coco Kee. This is your gateway to fresh global perspectives and insightful discussions. Whether you're a curious mind, a global citizen, or a lifelong learner, you're in the right place to discover how blockchain innovation is shaping the world beyond your borders. Everything on this podcast is for informational and educational purposes only. It represents personal views and opinions and does not constitute investment or financial advice or recommendation.
Martin de Rijke, Head of Growth at Maple Finance. Welcome to my podcast. Where do you call it home?
We really appreciate to be here. Thank you for inviting me. I'm in the Netherlands, in Amsterdam. The beautiful trees behind me are in Amsterdam.
It must be a beautiful summer. It shouldn't be too hot over there.
Now it's great weather. Earlier today, it was like a monsoon type of rain, but now it's nice and sunny. So it's just a typical Dutch summer. It's very good weather.
Thank you for joining me. I always start with the background of my guest. Please tell me about yourself. How did you get into this industry?
In 2015, I was at my grandparents' house and my grandmother told me about Bitcoin. She read it in the newspaper and she was like, you're into finance, so why don't you check that out? So I checked it out and it was really amazing. So, fell in love with Bitcoin and crypto and never looked back. I've been in the industry for 10 years now, personally. And then 3 years ago, joined Maple Finance on the marketing side and I scaled through the org and now heading up growth.
That's terrific. Usually it's younger generation tells the older generation about Bitcoin and crypto. I am so impressed by your grandmother.
She's very open-minded and changed my life in that way. It's often the other way around, which is also why it's a funny story. Often it's like people hearing it from friends or reading about it on the internet. But in my case, it's the opposite. Very grateful to my grandmother.
How would you introduce Maple Finance to someone unfamiliar with it to bring the person up to speed?
Maple Finance is an asset management platform on chain. So we take in stablecoins and Bitcoin from clients and we generate yield on those assets. There's a variety of different yield sources we have. On the stablecoin side, we have over-collateralized lending to institutions. We take in USDC, USDT, and we issue it out to institutions. We receive collateral backing the loans, so it's all over-collateralized. And then on the Bitcoin side, we have a Bitcoin staking product in partnership with Core. We see ourselves as an asset manager. Think about BlackRock in traditional finance. They manage a whole variety of assets for their clients. And we just do the same. We manage all those assets on the blockchain. So it's full transparency. Our users can verify where all the assets are, where the collateral is. They can verify all the different loan terms and how we manage the portfolio. It's global. So we have all the benefits of the blockchain while retaining those asset management principles that have been battle tested throughout time and applying those to the cryptocurrency market. We've seen very strong growth. We started the year with about 400 million in assets, and now we have 2 billion in assets. As of the time of the recording, rapidly growing.
Before we dive into your business, there's a lot to unpack. I want to ask you about the news which recently broke, the partnership between Maple and Cantor Fitzgerald. It's big news.
Yes, it's huge news. And it's really one of the first times that a big TradFi firm branches into DeFi and partners with a DeFi platform. So we're really excited about that. It's a big moment for Maple. And it's also a big moment for the industry. We're seeing that traditional finance is really coming into DeFi. And they work with DeFi platforms that are operating on chain. This validates that TradFi is actually coming on chain and they're not just going to use the blockchain in their own environment. That's really huge for the industry. In terms of what it means for Maple, first of all, you can imagine that these counterparties do a lot of diligence. It shows that our processes and the way that we manage assets lives up to the standards of traditional finance. And the second, it's just a massive growth opportunity for us. Cantor Fitzgerald have allocated $2 billion to this initiative. Us together with FalconX are part of that right now. We're really excited to grow with that and onboard those assets on the platform. This is just the start. This is now a first partnership with a large TradFi firm, but we are looking to expand and grow the number of partnerships with all the big banks and asset managers.
Cantor Fitzgerald, they create this fund backed by Bitcoin. They lend out to Maple Finance to generate higher yield through your platform. Is this something I understand correctly?
Yes, they are providing us capital for us to earn a yield on it. And then we pass back a yield to them. So it's like a wholesale facility where we take out a loan from Cantor and then divide that loan up against other borrowers. They are just a capital supplier. We are then responsible for generating the yield, which is obviously our core competence, right? That's what we're best at, is closing good deals at attractive interest rates with high quality borrowers.
It is amazing that your platform has passed their due diligence, as you brought up. They definitely will do very detailed due diligence before they issue the loan to you.
It's hard to imagine how much diligence these counterparties do. There's a lot of touch points across compliance, operations, credit underwriting, security, legal, commercial negotiation. You need to pass all of those different stages to be able to work with these counterparties. And often those are multi-month, in some cases, multi-year processes. As we do more of those, we also work now with Bitwise, which is a similar process, also a large asset manager in the crypto space. I did a press release with them a couple of months ago. As you work with a couple of those, the other ones come faster too, right? Because there's already some validation of us meeting those standards. We do see that those diligence cycles also speed up over time.
People may not be aware of the importance or the significance of this project, because when TradFi enters DeFi, there are so many barriers, including compliance and DD challenges. This is really a milestone event.
Thank you. We are really excited to be part of it and help the space progress further. This is very much what we believe in, which is you have to combine the best of TradFi and the best of DeFi into one. That's really important. You cannot just leave everything behind from TradFi. There's a lot of inefficiencies and a lot of things can be improved using DeFi technology, building things on chain, and all the benefits we're familiar with. But it is still important to apply a lot of those TradFi principles and processes. Most of our team comes from TradFi as well. They work for Goldman Sachs, JP Morgan, Deutsche Bank, PIMCO, large TradFi firms.
I want to double click on your business. You have the yield earning, you have the lending part, and then you also have Syrup. Let's go through them one by one. First, for the lending part, you bring the borrower and lender together, which means you have the demand side and the supply side. Can you walk me through the demand side, which is the borrower? Who are they? Why do they need to borrow from Maple? And the supply side, which is the lender, who are they? And what type of assets can they lend out through Maple?
Yes. Let me start with the supply side, because it's the most natural way to explain it. On the supply side, we take in stablecoins as one asset from suppliers. And those suppliers, they just simply want to earn a yield on their stablecoins. They don't want to have idle assets. And they think about three things, right? They think about the yield itself, like how high is it? They obviously want to earn a high yield. Then they think about the risk, like what is the risk of losing anything or the yield being lower? And then they think about the liquidity, right? So what if I need my stablecoin suddenly for something else? How fast am I going to be able to get those? We are probably the best product if you look at all those three factors in the space, because we issue loans to institutional borrowers. By issuing those loans, the interest rates are fixed. It's very stable and consistent yield. And they're not just loans, they're over-collateralized loans. They're backed by digital assets, Bitcoin or Ethereum or Solana or other digital assets. And it's always over-collateralized. We issue a $10 million loan. we will have 15 million or 20 million in collateral backing the loan. In case the borrower cannot repay the loan for whatever reason, we can sell the collateral. We protect the loan that way. In terms of liquidity, they're all short-term loans up to 30 days. So let's say you have a $10 million deposit with us and you need it back. You often have it back within 24 hours, which is very unique. In TradFi, if you do lending, often you're locked for at least a year and sometimes up to 5 years. They're long-term loans. So that's the beauty about crypto. It's very short-term liquidity, gives you flexibility and optionality. The yields are very consistent and very high. We have yields anywhere between 7 and 12% right now on dollars. And it's all over-collateralized. And all the collateral is 24/7 liquid. You can imagine Bitcoin, we can sell it at any time. We don't have to worry about illiquidity there. The borrowers are all large institutions, large exchanges, large trading firms, prime brokers, market makers. And the reason they want to borrow is that they're often sitting on assets. They have a large Bitcoin, Ethereum, or just Solana position for a variety of reasons. Maybe they're a fund and they just hold it for returns. Maybe they're corporate and they have it on the balance sheet as part of their corporate strategy. But for whatever reason they hold the asset, they want to borrow against it at maybe 9%. And they want to invest that into their business to grow it with 15%. There could be a market maker that borrows against Bitcoin and they borrow 9% and then make markets and make a 13% return. Did they take the spread? But they don't have to sell equity to get access to that capital. Every borrower has a different proceeds of funds, but it's all ultimately to grow their business and make a higher return than whatever they pay for the interest. It's a very scalable market. Bitcoin is a $2 trillion asset. There's a lot of people that want to borrow against their Bitcoin because they want to unlock liquidity and do other things with it. The market is only going to scale more and more because tokenization is a massive trend. So the amount of assets that are coming on chain is going to increase exponentially. And we as Maple will be able to provide financing against those assets. We don't really care what token it is as long as it meets our requirements. You can imagine if at some point there's a tokenized stock or a tokenized bond or a tokenized real estate, as long as there's sufficient liquidity behind it and we understand it and we underwrite it, we could provide financing against it. It's an extremely scalable market and we are at the very beginnings of the growth journey.
Thank you. Let me try to sum up what you just told me. On the supply side, the lenders lend out stable coins to borrowers. The borrowers usually are institutions, large institutions, and these institutions need to over-collateralize their loan. And what would be the TVL for that? But we'll talk about that. So the institution need to put up collateral, which is over-collateralized in order to get the loan. And loan usually is a short time, for example, up to 30 days. Did I get it right?
Yes, you got it absolutely right. I think your question about the LTV, right, is like the LTVs on the loans, right? What are the collateral ratios? A typical Bitcoin loan is like a 70% LTV. That means that it's about 135% over-collateralized. So that means that it's about 10 million loan size, 13.5 million in collateral initially. If the collateral value drops, let's say it drops to 12 million, we will do a margin call. We will collect more Bitcoin from the counterparty. If they don't have the Bitcoin, we will do a liquidation. If the price keeps falling at 11 million, we'll do a liquidation. Liquidate Bitcoin, sell Bitcoin, and pay back the loan. The rest of the proceeds go to the borrower. We have a very strong operating history. We've been running this product for almost 2 years now. We've never had a default, first of all. There's never been any losses on our over-collateralized strategy. And we have had more than 100 margin calls, meaning that collateral prices fall and we need to collect more collateral, of which 98, 99% of them are cured. We have had 2 liquidations so far, where we sold the collateral and we repaid the loans. And that's all part of over-collateralized lending. If that happens once in a while, and it shows you that the processes and the machine that we've built works. And that's been battle tested through a lot of violent drawdowns over the last couple of years, like the Bybit hack, the largest liquidation event in crypto history, then the Japanese yen carry trade unwind last August.
Back to the margin call, the over-collateralized mechanism, it reminds me more of CeFi than DeFi because Aave compound, they will automatically liquidate your positions. There is no margin call. They will not remind you to top up your collateral before your exposure is liquidated. Is it something unique for Maple Finance?
We combine the best of DeFi with the best of TradFi in that sense, where we believe that margin calls really help for risk management. To your point, in traditional DeFi platforms, you just wait for the liquidation. The borrower needs to monitor it all themselves. But that's not optimal. You actually don't want liquidation, ideally, because it's just going to make the price go down more and it keeps cascading. What you actually want is the borrower to send more collateral and get back to higher collateral levels. That's what we do. And then the beautiful thing is that this is all written in legal documentation too. The borrower is obligated to send us more collateral within 24 hours. And if they fail, even if we don't hit the liquidation level, we can still liquidate them. This buys extra security for the lenders because, first of all, we collect a lot of additional collateral during these market events. We're much more proactive. And second, if they don't have it for whatever reason, we know that upfront and we can liquidate them before we even hit the liquidation level. Overall, this model, if you look at the average collateralization levels over time, we have higher collateralization levels than other platforms. Which is, obviously safer and you have more of a cushion during these drawdown events. The other benefit is that often what happens during these drawdown events, it doesn't just go down in a straight line. It goes down and then it spikes up a bit. It goes down and it spikes up a bit. And the beautiful thing is it goes down, we collect a lot of collateral. There's a lot of margin calls and then it goes back up. And we have a lot more collateral suddenly than we had before it went down. So then if it goes down again, we are ready to weather that storm, right? We are at higher collateralization ratios. If you do the math and you look back over history, this is a much more secure strategy for doing over-collateralized lending. To your point, it's the way it has been done forever in TradFi too, which is, again, one of our points, right? It's don't change the things that actually work.
The liquidation mechanism is something that institutional borrowers care a lot. And maybe that's one of the reasons they stay away from pure automatic or smart contract controlled liquidation. For example, Aave or Compound. Large institutions are a little bit scared of that type of liquidation. I'm impressed that you guys understand the mentality of large institutions and try to create this unique feature for them.
Yes. That's the reason why they love working with us, because they see that we build it the way that they want it. And that's also one of the key differentiators about Maple. If we go back to first principles, then everything that can be improved will improve. But again, we also really focus on our clients. What do our clients actually want? Institutions love an actively managed loan book because of the reasons we just discussed. So yeah, we're very focused on that and building it out and combining both of those benefits.
When it comes to collateral, besides Bitcoin, what are the other coins or tokens that you accept as collateral?
There's a couple tokens we accept right now. Bitcoin, obviously, Ethereum, Solana. And then we also accept the Athena, USDE, and the Pendle version of it. And then there's Lombard BTC, XRP, and a couple of other collateral tokens. In general, I would say we are relatively risk off. So we don't accept as many collateral tokens as other platforms. We reject a lot of collateral tokens too, because we are just extremely focused on the risk management side of things and the security of the collateral. The loans we love the most are just Bitcoin backed. Just Bitcoin backed loans, Ethereum backed, Solana backed. Those are the loans we love doing because we feel those are the best assets. And then yes, there's a couple other collateral assets we accept, but then it commands a rate premium, lower LTVs.
Do you also look into the balance sheet of the borrower?
We have a 4-level diligence process. First, we look at the collateral asset itself in isolation. Then we look at the exact loan. How big is the loan? How much collateral is it? Is the size appropriate? What are the LTVs? Things like that. Then we look at the borrower balance sheet. So what if we do the loan and the collateral starts dropping. Can the borrower send us more collateral? Do they have enough on their balance sheet? Can they send other collateral? You can imagine if we accept Avalanche or Solana as collateral and the borrower has a big chunk of Bitcoin on the balance sheet, that gives us a lot of comfort. If Solana falls in price, the borrower can always send us more Bitcoin and protect the loan. We always like to see either the same asset or higher quality assets on the balance sheet. If there's illiquid assets or very small assets, we don't really consider those as value, right? Because we cannot accept those as collateral. So the borrower balance sheet and how big it is, that's really important. That would dictate whether we do the loan at the interest rate and the LTVs. And then finally, there is legal recourse too. For whatever reason, let's say the borrower, they have a Solana-backed loan and a lot of Bitcoin on the balance sheet. If Solana goes down in price, that there is this gap between the value and the loan, we have full recourse to the balance sheet. We have legal right to the Bitcoin. That's why you don't have on-chain. Like you can imagine if you're lending on-chain, that's what they call bad debt on Aave and other platforms. There's no recourse. There's nothing you can do as a supplier. We have full recourse to the borrower balance sheet. So those are sort of the 4 levels of protection on how we think about underwriting.
When it comes to the supplier side, the lenders, when they lend out stable coins, there is less risk for you to manage because they send you the stable coin and you don't have as much risk to manage as managing the borrower.
The stable coins, they come into a pool, an on-chain pool. We issue them out in loans. The risk is managed holistically in that sense, but we don't actually get the stable coins into our wallets or anything like that. It's managed with smart contracts. So you still have the full benefit of DeFi from that perspective. You deposit into a pool. For example, you deposit USDC into SyrupUSDC, and you get a SyrupUSDC token in your wallet. And the SyrupUSDC token represents your position in the pool. And you can also sell that position on the secondary market. So that position just accrues in real time with the interest that's generated on the loans. It's really a beautiful mechanism where the yield accrues in real time and you have a lot of optionality with the token. You can put it in DeFi, you can borrow against it, you can trade it, you can put it in Pendle, and you unlock all of that utility. The risk is really managed on the loan side of things. We carefully think about the loans that we issue, the collateral that we accept.
Is Syrup something that you create to get more stable coin supply? Because if you manage both borrower and lender, if you have a lot of demand from the borrowing side, but not enough from the lending side, then you won't be able to generate enough revenue for your platform.
There's one protocol that's Maple. Syrup is the asset, SyrupUSDC. And then you also have SyrupUSDT. Those are like the two assets, but SyrupUSDC is really the biggest asset. The way that works, to your point, is indeed to attract additional supply. So people can deposit into SyrupUSDC. They can mint SyrupUSDC. And then think about it in the same way as you have dollars in a bank account. Let's say you have dollars in your bank account and you mint USDC. You suddenly have a stable coin you can do stuff with. You can trade it on chain. You can buy a meme coin. You can buy Bitcoin. You can put it in Pendle. You can do whatever you want with the stablecoin. It's similar with SyrupUSDC. The difference is SyrupUSDC is yield bearing. You deposit anything into it, you mint it, and then you get a yield from the over-collateralized loan book. But you can still do all of the same things with it. You can still trade it. You can trade your SyrupUSDC for Ethereum or for Bitcoin or for any other asset you want. All the stable coins that come flowing in, we use those to issue the loans. For us, it is indeed supply side liquidity, and we use that to grow our loan book. And the loan book is fully managed within the SyrupUSDC on-chain environment. All of the stablecoins that come in are issued in loans from the SyrupUSDC pool.
For the borrower side, mostly institution, do you require AML KYC for the borrowers? And how about Syrup users? Is it just pure DeFi type wallets, no AML KYC required?
Yeah, the borrowers go through a full KYC and ML process. There's a full onboarding process because we also do the underwriting, review the balance sheet. Then in terms of SyrupUSDC, there's an ML process. We don't just accept any stablecoins. They go through a TRM labs check, a verification. Apart from that, it is permissionless. There's no KYC or anything like that.
What blockchain is Maple built on?
It's built on the Ethereum blockchain. And just 1 hour ago, we went live on Solana. SyrupUSDC went live on Solana, the DeFi asset SyrupUSDC. Solana users now have access to the SyrupUSDC. And we've launched it in partnership with a couple different partners. One of them is Camino. There's now a Camino lending product and multiply product. Camino is the largest player in the Solana ecosystem on the DeFi side. We're really excited to partner with Camino. And as those products out there for users, we're looking forward to growing that rapidly over the next couple of weeks. And there's 500K of incentives for users to benefit from.
Congratulations. Do you think that Ethereum has significant liquidity and TVL for your platform, or you still have to branch out to other chains? If you have to, which other chains besides Solana that you will look into?
Yes, Ethereum is by far the largest chain in terms of TVL. We can very comfortably grow a lot more on Ethereum. We also take the view that Ethereum, for the foreseeable future, is going to be the largest chain. We're always open to other chains. We're considering a couple other chains and working with a variety of partners to make that happen. I think Solana is the second biggest, more than $12 billion in stablecoins. So there's a lot of growth in that tank as well. We'll see which chain is next.
You are ahead of the growth. What is your strategy to grow and to scale quickly and to compete with, for example, Aave? Aave has over 20 billion TVL.
The market for asset management on chain is just going to keep growing and keep scaling. And the pie is growing massively. It's really important that we keep growing with the pie. And yes, Aave is bigger and they have their own focus and we have a slightly different focus and are seeing rapid growth. In terms of our target audience, we're really catered to institutions, but also to retail. We have the consistent yield. We have the Bitcoin product, the stablecoin product. That's what really differentiates us. Overall, there's a lot of big partnerships that are coming. We are now integrated with Binance, with OKX, Morpho, Pendle, EtherFi, Euler, many others. And we will keep going the list. So you can expect a lot more big partnerships to come. We are the asset manager. We issue assets. And if you think about an Aave, Aave is more like a money market protocol. You can deposit assets and borrow against it. So we see ourselves very complementary to Aave, where we want our assets to be listed on Aave, where people can borrow against them and use it as collateral. And from that perspective, we're very complementary. So we see it very much as a partnership and are looking forward to grow that over time.
Where does your high yield come from? Because I saw that you'll be able to offer up to double-digit yield for a stablecoin.
It comes from the loans. We issue the loans, get the interest. And then in some cases, we also stake the collaterals like Ethereum or Solana. We can stake it and earn additional yield.
The participants on your platform, mostly institution. What is the split between institution and retail? And for retail, do they have to be high net worth investor?
For SyrupUSDC, anybody can deposit. There's no minimums, not required to be high net worth. In terms of the split, in terms of dollar volumes, it's probably like 50-50 at the moment between institutions and retail type participants. I'm also really passionate about the more retail side because I want everybody to be able to earn consistent high yield that's safe. I'm very passionate about that. We try to get it into the hands of as many people as possible. The strategy there is really through partnerships, right? So Maple is the brand, Maple is the asset issuer, and then we want to make all of our assets available in a variety of different platforms where we meet the user. The user doesn't need to come to Maple, Maple comes to where you are.
That is also something I feel encouraged. Because in the beginning, when I checked Maple Finance, it requires institution only. And then the Syrup product launched. I think it's opening up to more retail users. That is the fun part coming in. How long do you think the institution side of the business will continue?
I think in the very long term, the institutional pie is bigger, like the pension funds and the sovereign wealth funds and the big asset managers, the big banks. But it also takes a lot longer for them to come and for them to change their portfolios. Like retail can make decisions much faster. I think that the hyper growth is going to come from retail. The long-term sustainable growth is going to come more from the institutions.
In the coming 12 months, any new products coming or brewing or you're planning for?
Yeah, I expect a lot of growth on the stablecoin side. And we have a liquid yielding Bitcoin product coming as well. LSD BTC, Maple BTC. It's a yield-bearing version of Bitcoin in DeFi, where you can earn yield on Bitcoin and use it in DeFi. You can post it on borrowing markets and earn yield. That's going to be a huge product. Like we see a lot of demand for that already.
Just came back from Las Vegas Bitcoin conference, and I did see tremendous demand for BTC back to yield products. I was excited for your new product coming out. Let's talk about the industry in general. We talk about a lot of your products and it's very exciting. I understand Maple was established during the last cycle. What did Maple learn from the last cycle's challenges?
There's a couple of big lessons that I think the whole industry learned. The main one is we need to prioritize DeFi and transparency. If you look to all the DeFi platforms, they operated very smoothly. A lot of pitfalls were just black box solutions. So I think that's number one. Number two, for Maple specifically, is we learned that it's over-collateralized lending. That's what we do right now, to manage everything in-house. Like then we had pool delegates on the platform. Right now, we manage everything in-house.
During the last cycle, you started with under-collateralized lending, but now you flipped to over-collateralized.
We started under-collateralized and moved to over-collateralized. That was a big lesson we learned. We have to go over-collateralized. Since then, we have had zero losses and a lot of strong yield generated for our clients.
Some people predicted during the last cycle that DeFi lending will flourish and CeFi lending will die out. But recently, I came across a bunch of CeFi new projects doing okay and growing fast. Do you think that DeFi in the end will dominate and do better than the CeFi lending?
I think it will be a combination of DeFi with some CeFi principles, sort of like what we're doing right now, the margin calls. I think having that is going to be very helpful. But I think over time, things will go more and more to DeFi. But DeFi, literally means decentralized finance. I think it's going to be more automated finance. That's probably going to be a better term, where it can be more centralized in the sense of how liquidations are managed. It's going to be more and more automated over time.
If you look at the leverage and the loan book size, compare with last cycle, to me, they look lukewarm. Why is this cycle, the lending, borrowing, not as dynamic and robust as last cycle?
I think a lot of the firms are just taking a lot less risk than last cycle. The last cycle was extremely explosive growth. There was a lot of risk taking. I think right now it's a lot more over-collateralization and things are just better managed. And there's less credit on the space. So that's promising for us that credit grows and expands. The amount of growth we're going to see is going to be huge.
My last question is, how the U.S. regulation help Maple Finance? Can you operate in the U.S.?
We have our institutional products live in the U.S. The Stablecoin regulation is going to be of tremendous help because when stablecoins are regulated, I think there's going to be a massive growth in stablecoin supply. Stablecoins are going to be looking for yield, right? Maple is going to be one of those natural places where they're going to be allocating yield. For us, the biggest friend that's important to the business is stablecoin growth. Because once there's stablecoins, people will look for yield and they will come to Maple.
How about other markets, stablecoin regulation? Will that help Maple business too? Your business must come from Europe or US?
It's probably a third US, a third Europe, a third Asia at the moment. Roughly split. I don't know exactly the split, but it changes month over month. Other stablecoins, none really taking off. USD denominated stablecoins are really the ones seeing massive growth. The US stablecoin regulations are by far the most important stablecoin regulations. Even in Asia and Europe, people like dollar yield.
How can people find you?
On X, just my full name, Martin de Rijke. And then for Maple Finance on X, we got a LinkedIn page, Maple Finance. The best place to really look for us is on X, Maple Finance.
Thank you, Martin. Good to have you today.
Thank you so much, Coco. It's great to be here. Thank you for the great questions.
Thank you for listening. Your support means the world to me. Share this episode with friends and family, and don't miss out on my newsletter, worldledger.substack.com, for the latest updates. See you next time. Bye-bye.